Good day, guys. Welcome to Forex Walker. Welcome to episode 73. Now, on this episode, I have something very special to me, something that I hold closer to my heart. I was looking for a trade that would fail for the longest time. I told you that this trade, I think it's on episode 72 or 71. I was talking about a trade that would fail. And I told you that this pound cat trade is a low yield trade on that episode. Go back and watch the episode. So, what is happening here is a misalignment or an out of alignment of a trade or perhaps market fundamentals where one currency is willing to take a certain position and the other is not ready to take that position. So what happened here is that the CAD released a few number of important macroeconomic reports that made me understand that it would be more important for me to buy the CAD than to have to sell it. And the pound here says I'm not ready to be bought. I will be selling for now, and I will be uh, going bullish in a later stage. And I told you that the general macroeconomic outlook on the pound is bearish. So the pound may sell, but for now it is the pound may go bullish, but for now it is not ready. But if you could have bought the pound with another currency, which is not the CAD, which in this case is the CHF, uh, so the bullish currencies at the moment, the pound is not necessarily bullish; it is temporarily bullish, and that that says the same thing in the euro, the CAD, and I think also the yeah, it's the euro, the CAD, and the pound, which are the currencies that are temporarily bullish. So it is a short term bullish move, but it would have helped the less bullish pound to become more bullish with an economic diverging currency, which in this case, the CAD is actually bullish. So this trade had failed. Let's say you entered the market so the market did reject. Remember the systems that we use in price action. What we do, I want to zoom this thing for you to see. What we do is that those people who trade price action, we look for this is where we do the first manipulation, where we do the first touch. We go to a 50% fib and the entry comes in here and the market goes up there. Now, let's say you have two positions, you take profit with the larger position and you remain with the smaller position. The market comes back to the entry level, even as you are receiving the macroeconomics on the CAD, and the CAD is telling you to buy the currency. What you are observing is exactly what the CAD is doing relative to the pound. And what happened is that, let's say this is the previous shoulder. This is a previous shoulder on a lower time frame. I think it's the 4 hour time frame or the 1 hour time frame. And let's say the buyer stop was here. You went up there. Macroeconomic reports tell you that you need to liquidate. So you did get the positive carry. So even if you liquidate at this position or at this level, you were still having a positive carry. So you did not take a loss. So this is the scenario that I was talking about when I called the pound CAD a low yield trade on that previous episode. That previous episode, I think it's episode 72, I was talking about economic divergence in a low yield trade. So this trade will actually fall all the way down there. But this is a temporary move. However, for those who want to buy the CAD, those who want to sell the CAD, because the CAD is the general outlook on the CAD is bearish. So those who want to sell the CAD, they need to wait for the bullish move in the CAD to recover so that they can hold their own trades. Now, this is the pound CHF, who is showing a beautiful economic divergence, but this economic divergence is temporary. It's not a long-term thing. It's a temporary because uh, the CHF is long-term short, but the pound is temporarily bullish and long-term short. So for now, we're just buying this pullback, and this pullback will it might go all the way up here, but this pound CHF uh, might go bullish, but in a long term, not now. At the moment, we are perhaps let's talk about perhaps January, not January. I think somewhere in March we might be looking forward to buying the pound CHF. But for now, the CHF is bearish and the pound is also bearish. It's temporarily bullish, but it is also bearish. So in the subsequent future, we'll look. Okay, what's happening in Switzerland is that the Reserve Bank is stingy. It's stingy with cutting interest rates. Their interest rates are at point zero, and once you get to zero, you are being tempted to cut interest rates into the negatives. And the Reserve Bank is not willing to cut interest rates, and the economy is going to suffer because of that. But once they get into the negative territory, Switzerland will have a lot of issues. And the Swiss franc is actually at the peak, is at the highest level that a currency can go before they introduce interest rate cuts. So the inflation is at the lowest level. They need the inflation at the moment, it requires an interest rate cut because the economy is not doing well. So what will happen to the CHF is that next year the CHF will sell for like the whole year, and those who do what we call a hedge inflation trade are going to make a lot of money in selling the CHF. This year the JPY was mostly bullish. It just recently became bearish, but I believe that the most bearish or the most famous currency to sell next year, the lowest performing currency next year will be the CHF. Yes, at the moment, the CHF is actually playing like it is correlated to the euro and making it difficult for us to to have a view about the CHF as a safe haven. So at the moment, the CHF next year, I believe that the Reserve Bank in Switzerland will have to compromise to jump into negative interest rate territory. And if they take a long time before they make that decision, that currency will collapse next year. That's something that will happen. Yes, I will be selling the CHF for now, and we'll see what happens in the future. That is what we have with the pound CHF being the main currency, but the pound is not necessarily bullish, so it's a temporary thing, and we'll have to replace it with another currency that will sell. I always say if it is not the right time to sell, then it is the right time to buy. So the currency that will best sell the CHF at the moment is the CAD, and the CAD is actually doing something that I've been looking at for a long time. So uh, I want to show you the things that I like talking about. First touch, second touch, third touch coming in as a manipulation. Here we had a third touch, but it did not manipulate. So this one did manipulate. So for price action traders, you can take this high yielding trade. However, the CAD will sell, but for now, you can actually hold it long term for a long time. It will spike. I believe it will jump above this trend line here. It will manipulate it before it sells, and that's something that you can hold for a long time. It is a positive carry, and the trade actually came back to the previous shoulder here, and it went bullish. So this is something that I am a little bit late in bringing to you, but what I can tell you is that it will break above this high and it will keep moving higher. And the time where the CAD will price in some sales, that's the time where we will be taking profit. And the CHF will actually continue selling. And so what will happen is that the currencies on the left of the CHF will keep changing. And that is something that you need to look out for. One of the best currencies that which you can sell the Swiss franc with is the euro. However, the euro is also bearish, but it is temporarily bullish. Uh, it is long-term bearish and temporarily bullish. So I'm running out of currencies that I can use to sell the Swiss franc, and you can actually look into the AUD in the future. So that means the best currencies. Remember, we are hedging the inflation in the CHF. So the best currencies to sell the CHF with uh, for this month, that will be the US dollar, the AUD, and there's a video where I told you about my term four trades, or where I talk about my portfolio as a portfolio. In that video, I have the MT5 opened up for you. So I have a portfolio that I have opened up, and that portfolio shows you the currencies that I'll be looking at for the month. So at the moment, we are looking at our, let me just bring my feed right here. And so what is happening here? Someone would say, this is the previous shoulder, the market will come back. Nah, it doesn't have to. This is macroeconomic reports. We don't necessarily invest our hearts in pullbacks because this thing is an economic divergence. So this is probably the last time that you will see the currency here. The only issue that we have is that this is a temporarily bullish trade that we are taking. So what will happen is that the currencies on the left will keep changing because we're hedging the inflation of the CHF. So normally you see me drafting a price action projection like that, but because I trade economic divergence, the currency does not necessarily have to come back here and go up there. It can make a tiny movement that has a pullback in it and never come back. So it looks like something like this. Let me show you this. It looks like something like this. It never comes back because of the economic divergence in between the two currencies here. This one has a few pullbacks, as you can see. This one looks more like that thing that I've drawn for you over there. Let's see if we can draft it for you. Yep, it went to the 50% feed. Let me zoom it. It went to the 50% feed, and then it came back to the previous shoulder. Let me draft this for you. The previous shoulder being right here, it came back and then it pulled. So it went to the 50% feed, the lowest level, the 50% feed, it came back to 23.6 and then it pulled. So that's divergence. This is a long-term trade. We're also hedging the inflation on the AUD. So this is the best trade that you can have with the USD. Goodbye, guys.